If we can talk about what's happening in the market, investors are certainly cheering these results. But the company even said themselves that the risks they cannot predict because they can't control all this COVID containment. So there are clouds on the horizon. How do you take it?
Yeah, well, I think it was a very smart move to actually not give guidance. I think what the company really said, if you read the fine print, is they were very focused that operating cash flow was going to grow. So really, I think Baba's results were quite good. If you look at the cloud computing business, that's 11.8 billion revenue business. This is growing about 30% and it's profitable. This was less than $1 billion revenue business in 2017. Just 5 years ago, this was only $1 billion revenue business. I expect the cloud computing business to be a 25 billion revenue business in less than 3 years. So as context, the best cloud computing businesses globally, Amazon's a 60 billion revenue business. That was just a 10 billion revenue business about 5 years ago. Alphabet's 20 billion, Microsoft 60 billion. So Alibaba's got a very long runway for growth on the cloud computing side. Next, Emily, the free cash flow of Alibaba, that was 15 billion in free cash flow. There are only 10 companies or so on the planet that generate that amount of free cash flow. Again, 1 billion active annual consumers in China. The last year's growth was 19%. The quarter was 9%. It's better than expected given the challenges in the Chinese economy. So I'm bullish on Alibaba. My stance has evolved. I think with this print and the share repurchases, I think this is very important. Alibaba purchased $10 billion in stock in fiscal FY 2022. Just in the last 5 months, the company's done about 5 billion. That's more than what Amazon's purchased in the history of Amazon's repurchases. So there are some positive signals, and we could talk about the valuation and how to think about the risk reward on the stock if you'd like.